Well, welcome everyone. Today we're looking at the trends that are shaping Treasury technology going into 2026 and also sharing some tips for finance teams that are looking to really level up and modernise their Treasury setup this coming year. I'm Amy from FinanceKey and I'm delighted to welcome our panel who all have a lot of expertise in this area. Joining us today we have our own Veikko Koski, CEO and co-founder of FinanceKey. We also have Treasury consultant Patrick Kunz, owner of Pecunia Treasury Finance and founder of the Treasury Masterminds community. And we have Teija Ridoutt, a senior Treasury leader with extensive experience in both public and private multinationals. So thanks everyone for joining us. And to kick off, I'd like to ask our panel, which of the hot topics in Treasury tech that have dominated 2025 will really have the momentum to shape what treasurers are doing in the coming year? So, where is the hype and where is the reality? And Patrick, can we start with you for that one?
Of course, there's always hype. If you ask treasurers what should we be doing, they all say, it has to be AI. It has to be a 24/7 instant treasury, which is cool. Which would be very nice to have a robot doing all my work, fully automated, having 100% accuracy on my cash flow forecasting. I can retire then, fine, but that's not reality. Reality is AI the use case for cash flow forecasting? Maybe not, because it's the more complex task for AI. So to be honest, what I'm seeing for AI as use cases is start with the simple automations. Start with your basics, get your treasury in order before you start looking at AI. Simple answer is here. Do you have full cash visibility? Can you see where your cash is at all times, with what bank, in what country? Because if you don't see that, don't even bother looking at AI or automations. You need to have your basics in order. And how am I connecting with my banks? Is it simple host to host? Is it Swift? Is it APIs? Am I still using end of day statements, or should I be looking at intraday statements? Do I need APIs? Maybe I do. Do I need 24/7? Maybe not. Do I need faster payments, faster information? Yes, I do. If I send a payment now, I don't necessarily want it to arrive in 2 days. Do I need it to arrive in 10 seconds? Yes, it's cool, but it's also fine if it arrives in 2 hours, to be honest. In Treasury, we have multiple priorities. We work with small teams, so we have to pick our battles, and we have to pick our workload and time spent. So basics in order first.
That's super interesting. What do you open up there, Patrick? Especially the cash visibility part. There's so many treasuries that still lack the visibility, and they're still Excel based, or then you have the visibility, but it's to the end of the day data. You're looking at the bank statements that came in from yesterday, and obviously then in order to get the visibility, you still need to log in manually to the e-banking portals, and you do it multiple times per day, and there are multiple people in the organization doing it for multiple purposes in order to manage liquidity and the cash balances. So yeah, definitely that's very much the basic stuff, and then also kind of like how important it is to get to access to the data, and in a structured way, and you might be still needing to kind of like unify the data in your tools that are kind of like outside of your main treasury solution, basically in spreadsheets, even though you would have a solution. So yeah, super interesting view on this.
I would just maybe add on that one that indeed the visibility is a key thing, right, before you start anything to be automated, but also, okay, you're not going to have a fully real-time visibility maybe to all your accounts immediately, right? And you don't really even need that, right? So maybe that 80-20 rule there is also applicable, that you have you have 500 accounts, well, maybe 100 of those accounts really never have any movement, right? So if you don't have access to those accounts, it's not going to really critically change your liquidity positions during the day. So here again, what Patrick, you were saying, that indeed just focus on what is key and then take it from there. So even if your data is not fully perfect, you can still go ahead and start to modernize and sort of get your treasury processes to the next level.
An interesting point actually is how much visibility can lead into automation, right? Because if you don't have that, if you don't have that visibility and connectivity to begin with, then it makes automation more of a challenge. Teija, maybe you could, can you think of an example, or can you think of some approaches that people can take, practical approaches to automation, like where's a good place to start?
Well, indeed, we'll talk about cash visibility all the time because it is indeed the key. You need to know where your source data in terms of cash positions is. So there, the automation in terms of obtaining your statements. So if you need it in real time, if you don't need it, you just take end of day statements. I've been in situations where there was not even a daily cash visibility really well for the corporation, right? So it was, you got maybe a monthly really good view on where all the cash of the company was. So depends on really, where you start, right? How good is your process currently? And then you start to take it from there. So if you automate that, monthly process already a daily process, well, you have improved the structure for your leadership, basically for them to take capital allocation decisions hugely already. But then if you are in another company that is already very modern and you need to take it to the real-time data, you automate that through APIs or other solutions that are currently out there. But it really depends on the baseline where you start, and then you start to figure out what has to be automated. It also depends a lot about what kind of staff do you have available. So all this that we talk about is great to talk about and great to think, great things that we could put in place. Well, do we have the staff in-house that is going to be able to implement all these great automations? At the end, it's going to help us, with the hours that we need to spend on managing these processes. But at this moment, how do we resolve this, staffing issue basically on getting it done? Another point then is do we get the budget on automating this? That how do we make the business case then on okay, well, this is how much value this automation initiative is gonna bring, and how do we use that maybe to get the budget, how to get the staff in to implement all these automation solutions?
Yeah, good points there. Definitely. I guess you go back to the visibility and that kind of allowing the automation part overall, and I think that's crucial that you can trust your data in order to start automating things. And Patrick, you touched base the data lake side of things. So how important it is to actually just have that one source of truth for your treasury data, hopefully also kind of more wider data that touches part of the business, that you can come up with the proper analysis and build quickly those ad hoc reports that the management comes up with, which consumes your resources.
And that's why I say start with smaller projects, because if you start with cash flow forecasting, you need all the data at once. You need AR, you need AP, you need payroll, you need taxes, which is probably not coming all from the same system, or the EP quality, the data quality is not good enough. I've seen projects where a machine learning forecast based on actual bank statements and cash classifications did better than the actual data coming from an ERP system, because apparently clients did never pay on due date. They paid late, they paid early, they had their fixed payment dates, which wasn't aligned with the due date. So some sort of machine learning logic, payment behavior just did better, but that was just for a certain set of clients. So on the AR side, on the EP side, the company was in control themselves, and they had fixed payment dates. So that forecast was also even better. So again, it was down to start with small projects to test your data quality, because of course you can automate your cash flow forecasting, but if that turns out an fully automated cash flow forecasting with a 70% accuracy, well, that might not be so well. So rather start small, semi-automated cash flow forecast with a 95% accuracy on accounts receivable. That's way better. And then you can look into payroll, into taxes, into other parts. And what Teija said, look into your business. What does your business need? You can build a 24/7 treasury, but if your accounting is still on end of day statements, who cares? Because if the end of the line is already treasury and accounting says, I'll do it tomorrow, it's not adding value. I had one client who sold cars online, and some clients were very fast. They bought cars online. They went to the shop intraday. I bought this car. This is now my car. I want to have it. I want to drive away with it. Wasn't necessarily the rules, but that's what happens sometimes. And of course, the dealership didn't even know if the car was paid because it was still intraday. So they called up Treasury. The Treasury team was 1.5 people. I was the half there, and I could deal with it 1 or 2 times, but not every day. That was too much. So in the end, we built some sort of semi-automation where the bank statement of only that company was put in a folder into an Excel sheet where the salespeople could check which intraday payments came in and was the car paid, yes or no, and then they could deal with it. Because yes, Treasury has the knowledge and we can solve problems, but we don't have the capacities, like Teija says. We are often the smallest team in finance. We have the information, we definitely don't have the capacity to deal with such projects. So we sometimes need automation, we need an API, and it's not rocket science. This was a simple API which pulled intraday statements and put them in an Excel sheet. No rocket science there, it just needed to be built.
Yeah. And indeed, I think also like within the organization, there's sometimes the lack of knowledge of the data that Treasury actually has access to that will be beneficial to the rest of the organization. So the concept of data lakes indeed is super interesting because the same data is used in so many parts of the organization, but actually there's not a lot of communication about who has access to this data already. And if you build this pool, you build this knowledge of what data exists, and then it can be sort of this initiative driven internally where Treasury is maybe coordinating and collaborating with tax or shared services or FP&A and others to sort of build and nurture that data so that it can be then used by the other parts of the organization to further automate their internal processes. So I also like the concept of, okay, let's not only focus on what we can automate in Treasury, but what we actually have, what can help others automate in the organization and make the rest of the organization more efficient.
Veikko, I was going to ask you about that because I think this is something we see a lot, like, how can we have a solution that works for the Treasury team and that works for the accounting team who sometimes have quite different timescales? So what's your take on that?
I think, what Teija is referring to is super interesting because at the end, the Treasury data and the Treasury task touches so many different teams in the organization, in the whole kind of finance organization, but also it has this element of touching the business, like Patrick mentioned, this use case around car dealership. That's a great example where APIs in real time actually benefit the company, and it's the benefit comes from outside of the Treasury domain. It's actually delivering the products to the customers. But yes, I think this is super valuable, having this single source of truth in a way of Treasury data, and it sounds somehow that when we talk about technology and there are these trends of AI APIs, it can be stable coins when it comes to like faster payments, but at the end it comes down to data and these data lake solutions, having those in place first, the basics, and that's where also these different teams can benefit from the data that the Treasury can make available inside the organization. And of course, there's ways to enhance the data with different tags so that it and kind of categorize the data in order for serve the different purposes in a wider organization, be it FP&A team, be it the shared service organization, and the various teams, be it accounts payables, accounts receivable teams under there overall.
Yeah, I think that is indeed essential, that that same data is available for all those AP, AR accounting teams, and it is often actually currently at the multiple times, what I've seen, before the concept of data lakes or even like APIs or real-time data has really been the hype. Amy, taking back to your initial question.
Yeah.
So before all that, indeed, like AR department, for example, was uploading multiple times a day the bank statements, and also like, okay, well, how much cost is associated with that? So as a treasurer, we are also the keepers of the cash in terms of transactional bank fees and all that. So that I also like to sort of bring to the scope that indeed it's not only about the efficiency and accuracy of data, but it is at the end also cost, because now your credit team or AR teams don't need to go to pull the data, but it's pushed to you and through the API, so they don't go to get the statement multiple times a day. I've seen huge amounts of fees paid to this kind of activity. So there's the financial benefit as well, and then of course the other benefit that comes from the value of the data and the access of the data. But definitely there's multiple benefits for the whole organization from this concept.
Yeah. Like I say, it doesn't necessarily benefit all companies to have the money in 10 seconds or in 2 hours. I worked for Booking.com. There we had, for some bank accounts, MT940s. They were huge. There were so many transactions on them, and it took almost 1 hour for them to load. We switched to an API, which was way faster, a couple of minutes. So that meant, in the cutoff time of our cash pooling, 1 hour of extra liquidity. In the case of Booking.com, that could mean 30, 40, 50 million a day on a good day. There it made sense. For a smaller company, this 1 hour might not make the difference. And I don't have cash pooling. I will look at 4:30 in the afternoon. What's my cash position? That's my amount to invest overnight. Or I'm getting interest rate on my bank account. There, I don't need it. So it really depends. What do you need? What's your focus? And focus there and solve your pain points. What's the pain point of your treasury? And can that be solved with automation, tech tools, APIs, connectivity? Is it a lack of data? Where should my focus be? And your treasurer, at least Teija and me are treasurer, you're on software sales. A treasurer really wants to look ahead, look forward. If I spend 2 hours in the morning importing bank statements, I'm acting like an accountant. I'm looking backwards. It's a waste of time for a treasurer. I only have 6 hours a day to forecast or to look ahead, to hedge my risk, etc. I need to be forward-looking. Maybe not 3, 4, 5 years in the future. Ideally 13 weeks, half a year. But that's what I do. I should be a business partner to the business, helping them reduce risk, helping them fund their bank accounts as lean and mean as possible. That's my task as a treasurer, not the operational task, which can be automated. That's where your focus is.
But the reality might be different. That the target state being the business partner, while we are still dealing with many manual processes out there.
Yes, but if you know that, if you realize that, then you can build a plan and see, okay, where am I not business partnering? Where am I not adding value? And I'm not saying you should be 100% business partner. You still have operational tasks to do. You won't be fully automated. But if the conclusion is half of my time is going to admin task or very operational task, then you are too operational treasurer. and then you're not visible to the business. And then, to be honest, you're a good treasurer doing treasury things, but you're not adding value to the business. And even treasury should be adding value to the business. You might not be a profit center, but I don't agree that treasury is a full cost center.
No.
Yeah. No, that's super important, being valuable to the business and showcasing the value. And of course, if you're just hands-on working with the stuff, that's just not enough in order to build your business case, for example, around the new tech projects that was touch based as well. But I guess it comes down to indeed starting with the small projects that they mentioned, and given that the teams are lean, the in-house stuff is doing the practical stuff and also jumping into projects. Obviously, there are companies and like yours, Patrick, helping, so Pecunia can provide the resources when you're running projects, and I guess that then helps a lot to achieve faster the goals you want to get and actually save time and effort.
I see it all the time. I'm talking to medium-sized treasuries, 1 to 3 people, and they say, "Oh, Patrick, I'm too busy." But then you get in this vicious circle. Because I'm too busy, I don't have time to automate, or I don't have time to upgrade. But I'm getting all these requests from my CFO, from the business, which I can't handle. So you need to prioritize, and sometimes you need to take a step back and say, I'm too operational. Now I need to take my time back first and to automate my manual tasks, because then, and that doesn't mean you're being redundant. Yes, you're automating your tasks so you free up time, but I know for sure that time you're getting back, you can spend way better supporting the business. So don't be afraid that you're being redundant as a treasurer. The fully automated treasury is still very, very far away. I think 20 years ago, everybody said accountants will be redundant because of automated accounting, automated posting. We have that now, so accountants have a slightly different role. And again, even now it's not fully automated as well. So I'm not afraid that we don't need treasurers anymore in 10 years.
I fully agree. And the concept on all this that we're talking about, like what should be changed and how do we get change happen? We'll start with small things and all that. But I also very often sort of think like, okay, what triggers the change, right? Because there is all these solutions out there. There is all these treasury teams, there's solutions then to staff additionally also if needed and all that. But what is actually the momentum that gets the change going? So I see that, okay, well, if the change request for your treasury processes comes from your business or from your CFO, that's not really great business partnering. Then indeed, what Patrick was saying, that we should rather be sort of looking in the future, how can we help the business grow, right? So you don't want the trigger to come from the business, but you want to be the one who is going to be sort of promoting for that automation or providing the change. So you either have in your team sort of these disruptors or in the individuals who really are driven by, understanding what is out there to be able to do things differently. And well, then there is sometimes also regulatory changes or other elements in the market that change, that triggers the need to automate or need to do differently. But that is an element that I always sort of see that, I'm curious to see when people change processes that, okay, well, what was the source of the change? That why did you start to do it, right? Like, was it really a pure need, or was it that you actually out there actively looking to modernize your treasury?
Yeah, I think that's a great question, isn't it? Like, what is the trigger? Like, when do you know that it's, or when do you need to make the shift to a more modern approach? I mean, Veikko, and obviously we talk to a lot of treasurers about what in your experience is often the trigger?
Is the trigger for starting something can differ, and I think this links a bit to the pain points that different treasuries, different industries, or different industries or treasuries in different industries can have. Patrick mentioned the high volume payments transactions going on in a company like Booking.com. That means that there's a different value of the real-time data than in other companies for in such a field. The same with mobility companies as well as then when it comes to and e-commerce as well. So 1 hour of extra liquidity can make a difference, and overall, the better visibility you have to your balances, the more efficiently you can manage your positions and actually get the extra yield or avoid overdrafts or drawing on credit facilities. Then it also comes down to kind of like those legal entity heavy setups where actually you might need 100 bank accounts. You have 150 bank accounts, and hence, and it can be per core cash management bank. You can have 3 banks with 100 bank accounts because of many legal entities you have, and there you just need the visibility, and also then building the bank connectivity. It can be faster just jumping into APIs and get not only the visibility, but also you can build the connections faster. These type of benefits you get from such for that kind of industry where you have just more complex setups. But yeah, to answer your question, the triggers are different. It depends on the maturity of the treasury, where you are, what kind of systems you are running, and what is the pain point that you could solve that makes the biggest difference. And obviously, I guess it comes down to where to start and also how to connect that starting point to a wider solution, and kind of like that could then solve not only the specific pain point, but more of an end-to-end process. And I think that comes down to being able to build the business case inside the organization in the treasury, but also with your vendor in a way that, hey, let's start somewhere where we can immediately bring benefits, but make sure that we can then connect this initial goal to a wider thing overall, which we can solve.
Yeah, I suppose partly it depends on growth as well, right? Mergers, acquisitions. Sometimes treasury teams, shared service organizations are dealing with the scale, and then the perhaps more urgent priority is getting the day-to-day things working. But at some point, that situation usually leads to looking at the overall approach, right? Patrick, what do you think?
No, I agree. Business case, yes. I sometimes get the question, okay, do we need a TMS? Do we need a payment hub? Can we build a business case on what if we have a payment hub TMS? What's in it for us? So payments, lovely topic. Who's responsible for payments? Accounts payable. Who's responsible in the end for the execution? Treasury. Who's responsible and who gets the blame if a payment fails? Treasury. Accounts payable team, 10 people. Treasury team, 1, 2 people maybe, but we get the workload. So my vision is 100% automated payments in an ideal case, all coming from the ERP system. Nobody touches payments anymore, manually at least. There are exceptions, yes, but if I come into a company and then I see 40, 50, 60% of payments are only batched and automated, then there's definitely work to do. Treasury should not be doing day-to-day operational payments manually. In an emergency situation, yes. If you do them weekly, that's not an emergency, that's a flawed process there. So automate it. It's going to save Treasury a lot of work. It's going to save accounts payable also a lot of work, because these failed payments need to be rebooked, they need to be re-entered, master data needs to be corrected. And yes, it's going to be a pain. If you go to fully automated, you will have failed payments, because these payments automation will show you your master data is rubbish, that there are mistakes. I've seen it all. I've seen international payments being sent as SEPAs or the other way around. IBANs being used for international cross-border payments. It just doesn't work. Euro payments from a dollar account, please don't do it. It's hurting you. It's costing you too much. But just start. Yes, you start and you will make you will make errors. You will have failed payments. That doesn't mean the project is failed. It's going to force you to improve your master data. Go step by step. You're not going from 60% automation to 100 in overnight. If you go from 60 to 70 to 80 to 90 to 95, and somewhere you draw a line, I'm now happy with this, and just start improving.
Yeah, Teija, what's your experience of scenarios where you're looking at where to begin?
Well, very often, it's either sort of the curiosity of the team members on, if there's new opportunities or new ways of doing. So either you have a curious team that is sort of going out there on seeing like, what can we do differently, right? If you have the luxury of having, staff like that, or, sort of availability of staff to do these things. But then indeed, it's often comes from the pure need, right? So, your business is evolving, you maybe start from a smaller company that through acquisitions, this is my most recent experience, that, through acquisitions, the company grew and there was not really these corporate structures in place. So of course it starts from a place as well where there's just a pure need that through the growth, corporate processes such treasury processes have to grow. So that's where you start to eventually build. You have a white paper. It's not that you can put on the white paper the ideal thing and implement immediately the ideal thing, right? So you have to, again, returning to what we said earlier, really start from the core, right? So there, what are the places where you want to take control of things, where you want to get the visibility? What are the key things that you need to have some kind of a function in treasury organization that will enable then the business to further grow around, right? So again, it's I've been in situations like this that you just have to start with the very basics, and it's not going to be through API connectivity, or it's not going to be through a TMS, but it's going to be through your Excel spreadsheet. That is going to be initially the solution. And then when you have at least a little bit of understanding what is going on, then you start to again work on that white paper and the solutions that are going to help them to go to the next level, because it's to be sort of it's not one straight line that you want to go from A to B, but there's sort of pillars that you have to hit, and then you can't do everything at once, and you do the critical ones, and then you go to the next level where you want to be. So this is the situations in which I have been, and I just have to be pragmatic and realistic also about what you can do, not idealistic.
Yeah, Veikko, this is something we see a lot, isn't it? That they're just taking a practical approach, that not everything is you're not going to have like 100% connectivity, and or perhaps you need to have a workaround, and also work with meet people where they already are, and the tools they already used, right? Like Excel, Power BI, like the tools that they're familiar with and that they've got systems set up to manage. So that's something that we see quite a lot, isn't it?
Definitely so. And I think the interesting point here is that, and yeah, of course, you want to get that overall control, understanding what's going on, right? And it helps you then to plan what do you want to do next. Then the question is also that people have this kind of nightmares related to system implementations. So there are new tech available that can be, implemented in days or weeks versus the kind of super long, implementation periods that has required also a lot of effort from the teams. So yeah, definitely there are ways to do things faster than before, but I do agree. Getting a control over your stuff helps a lot, and then I guess it comes to down to also being able to take advantage of the latest technology and the tools, and for those small little tasks where AI can help you and in a way automate some of the lower hanging fruits out there.
I'd love to dive into this question that's come up now a couple of times in our talk, which is building a business case. I mean, you've all been involved with either helping clients build business cases or working within an organization to build a business case. So what are some perhaps surprising aspects or surprising or not obvious approaches to building a compelling business case that actually gets you to where you need to be?
My latest experience has been sort of like starting indeed what Patrick was alluding to, that if you don't have something like treasury systems or treasury visibility, whatever in place, what are the risks? So most recently I did overall sort of a finance fraud risk assessment for a company and identified various areas treasury related, but not only, where definitely there's solutions out there or process improvements that could be established or implemented that would help to mitigate those risks. So it is a pure sort of 360 overview of finance processes, no judgment. It's like, where are we now and what can we do differently and what are the areas of criticality, and we focus on those ones. And actually this is where we then started to build a business case on we need to modernize our payment processes. So maybe we need to have a payment hub, or we indeed have a little bit of a cash visibility that is much better than we had before, but that can be also automated and time can be freed up from the teams to do a manual process. So so through this fraud risk assessment, basically again, we look at the key risks, we look at the solutions, and we use that as a source then to take to the management that this is the risk of not having it in place, or this is the risk that we have in the current process, and these are the solutions that we can implement. And then very often it's a no-brainer. For example, risk related to payments. If it's a high risk, management is not going to push back on this one, right? So you really have to, again, we mentioned it multiple times, but find the things that make sense to get the momentum going. You have to get the buy-in from your leadership, basically, to invest the money in this. But again, if you started from this concept of risk and fraud, it's always a good place to start. And then maybe the surprising things that you sort of alluded to. So of course it depends on the company that in which you're working or in which context you are working with. So of course you have to be ready then to address like resistance, right? So there's still a lot of people who like the way that processes were done in the past, right? So you have to get the buy-in of the whole organization in order to be successful in implementing your business case, right? So we at Treasury might see a great benefit from something, but actual stakeholders within the finance organization maybe don't see the same way as we see. So it's important to keep the people with you, educate them on why you are doing this, why you're pushing for this business case to be implemented, or getting basically the momentum going, right? Because otherwise you're not going to be successful. You just can have push for something that is just not understood by the people, and the value is not understood, right?
Yeah, but Treasury is not first in line if it comes to budgets in the finance department. We're a small team, so we often do not have the budgets. Of course, it's December now. Your budget is probably ready. If it's not yet ready, go out there, fight for your budget, increase it. You're going to need it next year, but you don't know it, that you don't need it yet, but you might have it ready because you might need it. So if you don't spend it, okay, good. You didn't need it, but better have it ready. In so many cases, I talk to clients and they say, Patrick, I agree, and automation could help us, a payment app, a TMS. But I don't have the money, sorry, so we can't do the project. So I start talking about business cases, and depending on the size of the company, quantity times price or monetary savings. If a small monetary saving can already be enough if your quantity of transactions or quantity of idle cash is already high enough. I had one client. Idle cash was not significant, at least they told me. It was 500,000 here, and it was 500,000 there. But the here and there was on almost 50 accounts. So 50 times 500,000, that's 25 million, potentially to be centralized. Yes, it took some effort. It needed some netting. It needed some mini in-house banking. If you only centralize half of it, 12.5 million, you repay your RCF at 4 or 5%. That's 5% times 12.5 million times a year. That's one FTE right there, or a software tool being paid for. We did a project last year. The treasurer told me, Patrick, I think an in-house bank could make a lot of sense here. I'm like, let's do it. Let's build one. No, I can't go to my CFO. I'm never getting the budget. It's okay. Let's build a business case. I need a week of consulting hours. You have that budget. That's maybe 5K. We did a mini investigation. What if we did netting, mini in-house banking in combination with cash pooling, not even the full POBO robo yet. The conclusion was we could save 200,000 euros a year just by doing netting. The company had a decent size. But the implementation of the in-house bank required an extra module. It required some documentation. Implementation would cost 100K. We went to the CFO. CFO, we need 100K to save 200K on a yearly basis. CFO said that's free money right there. Can you start next week? Because this is free EBITDA, even higher. The business case was huge. 6 months later, the in-house bank was created. Happy client, happy CFO, happy treasurer. But it really needed a business case first. It needed a convincing of the CFO, because the average treasurer is not very good at that, at business casing, at getting budget up front, and getting budget anyway. So fight for your budget. And if you lost that battle, I'm happy to support on business casing.
So here the CFO's KPIs were linked to EBITDA, which is often the case, and that's how to find the way.
Maybe, but it's free money. Yeah, if you save 100,000 a year, if the profit margin is only 5%, that would have required 2 million in turnover to make 100,000 a year. Now we made a full 100,000 just by treasury optimization. So. Treasury definitely not a cost center, also not a profit center, but we are definitely a cost plus center. We can make money for the business.
Absolutely. Hey, excellent conversation. So to kind of conclude, if we see the needs today, it's very much the visibility which needs to be in place, and that kind of like links in a solution wise to having these data lakes available. Then the struggle clearly from the treasury side is that there's no time to automate. People are too operational, and where to start? You just need to connect the initial starting point and the smaller target into a bigger project in order to then build maybe the business case overall to the technology project you want to want to kick off. Is that the fair conclusion here?
Yes, it makes sense. But for that, you need to know what's out there. You don't have to invent the wheel yourself. Yes, the treasurer needs to be a bit more tech savvy. I always say I drive a car. I have a driver's license. I have no idea how a V6 engine perfectly works. But I know there's an airbag, there's safety. I know how to brake and accelerate. So I know how to operate it. Same in the treasury. You don't have to fully understand how an API works or TMS or bank connectivity or whatever, but you need to understand the basics so you can make informed decisions. I see treasurers making decisions on tech where they have no idea and they are not informed. And then 6 months later, they regret because the implementation was too flawed or delayed because of the decisions they made 6 months ago, because assumptions, knowledge gaps they had. And then I think, okay, at least educate yourself a bit. You don't have to be the expert and the sparring partner of the TMS, but you need to know what you're talking about. And then you can go out there and what tech is out there and what tech is going to be useful for me. And that decision depends on your setup, yes.
Yeah. So you would say that you need to know at what speed to operate your car, right? Because this is essentially it, right? So that do you want your treasury to move forward quickly, but maybe sometimes it's too quickly as well. So you have to respect your speed limit, right? So.
Yes, and sometimes it's okay to speed, but then you're going to risk a fine.
Yeah, indeed.
and then what comes to the new technology, it links very much to the basics. So get the basics in place, then you actually can get much more out of AI overall. And with APIs, these are super practical for many businesses, but it also depends a bit on a business and a use case who gets the biggest benefits there.
Yeah. Don't even look at AI if you don't have 100% cash visibility, if you don't have near 100% automated payments, because why are you looking at AI? You have your basics to solve first. Go solve that one first, because that's a bigger win than AI is going to win you. And you will be surprised how many treasuries do not have 100% cash visibility, do not have a high automated payment number. If you solve that, your treasury is already in 2025. Welcome.
Well, I think that is a great point to end on. All we've got time for today. So a big thank you to all of you and to our audience for watching. And if you found this discussion useful, we'll be sharing more conversations like this on LinkedIn and YouTube. So feel free to follow FinanceKey there to stay connected. Thanks again for watching, and we hope to see you in a future session.